The RMO, or the Rahul Mohindar Oscillator, has long been one of the most popular trading strategies within MetaStock. In this workflow, I'll be taking you through how to identify trades using the RMO and know when to get in and get out based off of its strategy. With that, let's go ahead and go into MetaStock. The RMO trading system will make it easy for you to quickly identify trading opportunities based off of the alignment of 3 different indicators. The RMO is powerful because it looks for alignments between long-term, mid-term, and primary trend. Let's start by opening up a chart with the RMO and showing you the different indicators. We're going to go to the Power Console. Let's open up a chart. And we're going to open up with a template. Now, opening up with this template makes it easy to quickly have all the indicators from the RMO applied on your chart. So we'll apply the RMO trade model, choose Open Chart, and here we have a view of the RMO as it's designed within MetaStock. So you may want to follow along with this video with your Unleash the Power of MetaStock book or PDF that you have to help you understand everything that's going on. But it should be fairly straightforward and simple as we go through it. Let's go ahead and first of all maximize this first indicator at the top. This indicator is called the Rahul Mohindar Oscillator, or RMO for short. And what this indicator does is it helps us identify primary trend. And primary trend is identified by this indicator either being above or below 0. So what we're looking at right now, RMO is above its 0 line. So we can actually add a 0 line right here just for visual. So you can see it's above its 0 line, so that indicates that it's bullish. When it's below, it's bearish. So when you're looking at this, the shape size curve don't really have a lot of relevance. You may adapt it to your own needs and look that it does have relevance, but Rahul, when he created this, said that that has no relevance to the overall bearing. We're just looking for it to be above or below 0. Now, these set of indicators here are called Swing Trade 2 and Swing Trade 3. So Swing Trade 2 is the purple set, and Swing Trade 3 is the blue set. The Swing Trade 2 is identified as midterm trend, and then the blue is long-term trend. Let's actually just double-click on this to change these. We're going to make these align temporarily so you can actually see them a little more clearly. And what we're going to do is just minimize this back in to our chart here for a moment, and we're just going to close this one and close this one. Because what we're looking at is we're looking at actual changes in trend with these, and these actually trigger the indicators that you see at the bottom of the chart. So what you'll see is you'll actually see when the midterm trend crosses above long-term trend, you get this blue buy arrow. When it crosses below, you get a sell trigger. Okay? When the midterm trend crosses above or below the 0 line, you'll see the color of the bars change from blue to red. So you can see here when it crosses above, it turns blue. When it crosses below, it turns red. So these indicators are generated all the signals that are below. So again, our blue arrows are generated by the midterm crossing above the long-term trend, and again, crossing below will generate the sell signal. When the midterm trend crosses above the 0 line, it changes the color of the bars from red to blue, and when it crosses back below, they change from blue to red. So what we're looking at, and we actually need to get the whole template back, so let's go ahead and bring the whole template back. We'll just reapply the template, and that'll bring all the indicators back. We're seeing a convergence of trends. So we have primary trend, midterm, and long-term trend come together. So let's just open up Notepad for a moment here. And what we're looking for is we're looking for 3 things to enter our trade. We want the RMO to be above 0 to enter in long. We want the latest arrow to be blue. So we don't just buy on the blue arrows, we're actually looking for multiple confirmations here. And then we're looking for the price bars to turn blue. Okay, so when those three things happen, that's an indication of entry. Now, one thing that's important to note is not all three of those things need to happen on the same bar. We're definitely looking for these to come into alignment, and when they do, that's a trigger to enter, but they don't have to happen at the same time. Now, if I was going short, I would do the same thing, except the opposite way. I'd go RMO below 0, latest arrow to be red, and then price bars to turn red. Okay, so when those things go into alignment, that's a short or an exit signal. So let's just look at a chart here for a moment and see what's going on with this particular chart. So let's go back here to the last time the RMO was below 0 and look what happens as it moves up above. So as the chart moves here, you can see your RMO goes above 0 there. But that's not our indication to buy. We're actually looking for an alignment of the three criteria coming together. So when those three criteria come together, we'll get in. So we've got our RMO above, our price bars are still red, and our last arrow was red. So it's still not an entry signal. So we go on to the next bar, still nothing. So we continue on. Then we get a blue arrow. So do we get in yet? The answer is no. We don't have all three of the criteria coming together yet. So we need to wait for that third criteria to come together. Okay, so then we get into our next few bars, and finally our price bars turn blue. So it's given us the confirmation that we have all three of the signals together. So what do I do at that point? Well, I could do one of two things. I could go ahead and just set my enter in for the next trade, or I could wait and buy above the high as a confirmation on the next bar. So you have two choices there. So in this circumstance, we'll say we get in on this trade. Now, what Rahul says to do is to go back to the bar below, before the signal and set your stop. So let's go back there and let's just set a little stop loss line for us right there. Try that again. Okay, so we have that on our chart. Let's actually make it a little bit bigger so we can see it. We'll just do it this way. Okay, so we've got our line on our chart there. So that would be our stop. So we entered in on this bar. What happens on the next bar? Well, we had a bit of a pullback there, but we did not exit out. So we then hold into the trade, and the trade continues up. Now, setting stops and moving stops is really going to be up to your discretion. If you're using a trailing stop, it would definitely move up with it, or you can set your stops how you prefer to give them movement. But we'll just kind of follow along with the rules here at the moment. So now, as it continues up, we had a gap up here and then a pullback, and now we have a red arrow up here. Now, is that necessarily an indication to sell? Not necessarily. You know, what you can do is you could use one as an exit signal, you could use two of the criteria as an exit signal, or you could use all three of the criteria as an exit signal. So that's based on how you are as a trader. But one thing we could definitely do is we've got profit, since it's moved up from here to here, is we can move up our stop. So let's go ahead and move up our stop a couple ticks below that and see what happens. So we've moved up our stop here. Then we move on to the next bar. We may have stopped out there if it was too tight, but it looks like the bar went up, so we'll continue in the trade. So here we get another entry signal. We have our price bars blue, we have our RMO above 0, and a new reversal here. So there's a couple of options here. One is if you're not in a trade, it could be an opportunity to enter a trade. If you are in a trade, there's an option to ladder into a trade here. So keep that in mind as a consideration. So now we have a new entry signal. So we're going to go ahead and move up our stop again to a couple ticks below the previous bar before the signal. And then it continues along. Now right here, depending on where we set our stop, it kind of hit it right on there. So we may have stopped out there depending on how tight you'd set it. And then as it moved along, we definitely would have stopped out right here before we had this reversal, but we were not in the trade as it gapped up back here. but we got this big movement here. So you can see overall, if we look just quickly, you could see these movements with the RMO, that it does work extremely well in identifying those changes in reversal and trends and helping you identify opportunities. So it becomes, again, very simple if you just follow the rules of RMO above 0 for an entry, latest arrow to be blue, price bars to turn blue, and then if you're going the opposite direction, RMO below 0, latest arrow to be red, price bars to turn red. Okay, so let's go ahead and talk about scanning the market using the RMO. Let's go ahead and close our charts here. Now the RMO is actually great because what you can do is you can divide the scan up to identify portions. So if you just want a list of stocks that are above the RMO, above the 0 line on the RMO, or that are new price bars, or that are generating signals. So there's a number of different things. So we have the RMO bearish and bullish zone, so that's above or below 0. The new blue bar or new red bar, and again, those are generated by swing trade 2 and 3, and the buy and sell arrow again, which are generated by the swing trade 2 and 3, or the midterm and the long-term trend. So let's say we wanted an alignment of all 3 criteria. So let's look for the RMO bearish zone. Excuse me, let's look for the RMO bullish zone. Let's look for a bullish trade, a new blue bar, and a buy arrow. So if we combine those 3 things, we have our alignment of all 3. RMO above 0, new blue bar, and our latest arrow to be blue. Okay, so what we're going to do now is we have our scan. So we have all 3 set up. We're going to do the NASDAQ 100 and the S&P 100. Now what we want to use is the results from the preceding exploration. So I'm going to go ahead and choose that one, choose summary, and then what this will do is it'll allow me to order the list that they go in. So which one do I want first? RMO bullish zone, new blue, or buy arrow? Well, that order actually works pretty well for me, but if I wanted to move them, I could just order them up and down. So let's leave it in that order, and let's go ahead and start our exploration. So what it'll do is it'll look through that list of 189 and find ones that are above the 0 line. So let's let it go ahead and do that there. So it's rejecting about 38% of those. And then it moves on to it takes that list of 60, 70 stocks and then scans those, and then uses the list of 10, 15 stocks and scans those. So it moves down in order. So finally, our last one is the swing trade buy arrow. Choose reports. And we have 1 out of that 189 that meet all 3 criteria, which is great because now we can come in and we can just quickly analyze it. And we can see there's our new arrow, bars are blue, and there we go. So there's a brand new setup for us that we can use to enter into a trade. Okay, so that's how you can use the RMO to quickly identify change in trend opportunities and scan the market to identify the quickly buy and sell opportunities. I hope you have found this video useful. I hope you can employ the RMO as it is a great strategy to use as part of your trading with its money management techniques. Good luck and happy trading.